Well, we're starting to see inorganic growth due to companies merging. And while there may not be a concern now, at some point, an index value might tell us when we're getting into the yellow or red zone for are we still a competitive market for these different space applications.
And that has policy implications for governments that are looking to create competition, create growth, diversification, not just one or two big companies.
Hello, welcome to the Space Policy Show. I'm Colleen Stover with the Center for Space Policy and Strategy, part of the Aerospace Corporation. This episode is part of our Deep Dive series, discussing some of the most pressing issues for space policymakers today and over the next several years. In this show, we explore measuring the space economy. While space certainly brings value to the economy, the methods and tools used to measure that value can result in different outcomes and influence how we view the success of the sector. Our guests are Karen Jones, Senior Policy Analyst and Space Economist here at the Center, and Dr. Brian Weeden, Systems Director at CSPS. If you like what you hear and you want to dive even deeper, check out their research paper, Rational Exuberance, Understanding Value and Performance in the Space Economy, at csps.aerospace.org/SA2025. Thanks for joining. Over to Brian.
Thanks, Colleen. My pleasure to be here today, talk with this topic, and be joined by Karen. Karen, thank you for joining me.
Thank you, Brian.
I'd like to open by talking a little bit about why we felt this is an important topic. One of the biggest changes in the space sector in the last few decades is the emergence of the commercial space sector. While there have been commercial space activities for decades, dating back to the 1960s in the case of telecommunications, we have recently seen massive growth in both private investment in space and expansion of commercial activities into other sectors that really hadn't seen a lot of commercial before. That growth is bringing with it a wide range of new opportunities and benefits. Accessibility of remote sensing to pretty much anyone with a smartphone, expansion of global access to broadband internet communications, commercial launch that's bringing down prices for many others. At the same time, there's a lot of hyperbole and speculation about commercial space. Lots of claims and prognostications about the future size, value of commercial space, and in many cases, not a lot of publicly available data to try and make sense of those claims. So we felt that it was important for policymakers, other stakeholders, to really understand the methodologies that are used in all the various assessments that can then help inform policy decisions they're making that rely on the size and direction of the commercial space sector. Because history shows that not all attempts at commercialization have been successful in the past. Things like the original Landsat commercialization, satellite servicing attempts in prior decades, those were pushes by governments to say this is going to become commercial. That didn't pan out at that point in time. And while we all hope that this time things are for real, we want to make sure that that is going to be the case. So today we have lots of different assessments about the commercial space economy being produced by different groups, from industry, from academia, by governments, but it can be hard for the average reader to understand why those reports come to the conclusions they do and how they may be different. So Karen, I'd like to turn to you now to really get into some of the research you've been doing on this. What did you learn about the various models of valuation and why there might be some disparity there?
Well, there definitely is disparity. And this is because different valuation models have different methods and also scope. If you look at valuation models, you'll have some valuations that only cover the U.S., for instance. Some valuations only cover the satellite industry and not the entire space industry. So that's another variation as well. So you have to look, starting with what is the scope. But beyond scope, there is also different valuation methodologies that are very important to understand. And when I went into the research, I thought, well, are some just wrong and others right? And there's actually good rationale for the varying types of valuation models. But if you're reading these values and they vary significantly, for instance, World Economic Forum, 1.8 trillion by the year 2035 versus the Satellite Industry Association value, which is closer to 400 billion. So what are those variations? One, of course, is the forecast, and that's also a scope issue as well. Are you scoping out to 2035, 2045? So look at that as well. But the methodologies will tell us whether there is some double counting. And as you look at these models, you'll see that there's really two types. One that we call the top-down model, and that's actually a lot easier to do. It's less detailed. You basically look at the revenues. You look at the use side of the ledger, and you add up the different revenues that can accrue. Now, in doing that, there is always the danger of double counting. It does occur. But the merit to that valuation model is that you can begin to bring in some of these adjacent industries, the customer base as well. And that's where the growth is occurring, that you get into where the market demand might be. So I enjoy reading those reports. I don't think they should be vilified. I think there's some really good reasons why they're larger, looking at these adjacent industries and where that market demand is, whether it's going to the general global connectivity market, geospatial data market, et cetera.
Just to give an example, you mean by double counting, for example, it might include government expenditure, let's say $1 billion to purchase a commercial service, and then also including that $1 billion as revenue into the company. So in that case, it's counted twice.
Right, exactly. There's the make side and the use side. If you count both, that's double counting. So you have to really kind of follow that. Now, the U.S. Bureau of Economic Statistics does a bottom-up account of this, and they came up with really the lowest number for the space economy as a result. It is very time-consuming and tedious, and I really applaud BEA for doing this. But the number's low. But then again, they are really focusing on the make side, not the revenue side. And it's really a good counterweight for when I do look at these other valuations.
And the way that BA does that, they do that for space now in addition to all the other sectors of the economy. So is that also a way that we can kind of compare space to other sectors of the U.S. economy?
Absolutely. And in fact, within the Bureau of Economic Analysis, they have clear lines so they don't double count the space economy with other economies that they're also responsible for valuing.
So we have the top-down methodology, which is kind of putting together all the government expenditures and all the industry revenues or projections of revenue. And then there's the bottom-up, which is what BEA is doing, where they're counting jobs created and other factors. Those can be hard to measure, I'm guessing.
Oh, yes. They really can be. And then there's a lot of things in looking at these that make me realize that there's some really good best practices that need to be employed. And one is avoid straight line analysis. That's not how the real world looks. Straight line forecasts can be very dangerous sometimes and can be overly optimistic. So that's one to really look at. And beyond straight line analysis, another interesting thing that you should look for is who is writing these reports. Is it a financial institution? And if it's a financial institution, what type of incentives do they have? I read in one report that looked at various sell-side analyst valuations that often it's the marketing department that produces these. So it's really important to look at that and look for potential bias with some of these reports as well.
And sell-side, can you explain what that is? Because I want to be familiar with that.
Sure. So a sell-side analyst is a financial institution that may have some incentive to sell to their customers and to be involved in a future transaction involving, either underwriting some industry, in this case, the space sector. So they have a bias here.
Got it.
Potentially. At the same time, I read many of these reports and I have found some very good information in them. So it's, again, just being very knowledgeable as to who's writing this and what that bias might be.
So all this complexity leads us to the phrase we picked for how to think about the commercial space sector, and that is rational exuberance. And that's a play on a phrase made famous by Alan Greenspan, famous former chair of the Federal Reserve Board, correct?
That is correct, yes. So irrational exuberance is a term that's often used. It's often used when an economy might be in almost a bubble. It's a certain amount of market enthusiasm, perhaps not completely rational or based on fact. And so as we work together on this paper, we've entitled it Rational Exuberance in terms of, I think we can still be forward-thinking and optimistic about the space industry, but there is some froth. We've seen that a little bit, and we'll be talking about that in a minute. But how can we make this more of a reasoned, fact-based approach to looking at the space economy?
So how can we still be excited about what's coming in commercial space while being rational in how we go about that and how we think about that?
That is correct.
So with that framing, part of the analysis we've been doing is looking at the performance of the space sector compared to other industries, which is possible in both the top-down and bottom-up things, right?
Yes.
We can look at investment dollars flowing in, we can look at revenues, and in some cases, we have the economic data you mentioned from the Department of Commerce.
Right.
So what is your sort of overall assessment for how the space sector is currently doing relative to the rest of the economy?
Okay, well, I think Bryce Technologies' report for the state of the satellite industry, which is sponsored by the Satellite Industry Association, does a good job looking at these numbers because they've had a steady tempo with these annual reports, and you can see the performance. So that's very helpful. One of the things that's really interesting is if you take out the TV part of the market, the video to home market,
which traditionally has been the biggest part of the commercial space sector.
That is correct. Then the growth is actually good, but modest. And if you take out Starlink, then the growth is, it's fine, but it's still growing, but it's not what I'd call over and above some other industries, that's for sure. So Starlink is a huge part of the growth going on. They're going to have several $1 billion in reported revenues next year, and they currently operate over 60% of the satellites that are currently active in orbit. So they have become a huge driver for this growth.
And just to put that in context, you mentioned they're pulling in several $1 billion. Traditionally, the entire satellite communications market, much of which is television or video broadcast, I think is roughly around $100 billion or so a year. Yes?
Yeah, well, the satellite industry market's around $240 billion. But if you take maybe a subset of that, which is more communications oriented, yes. And so then you take what Starlink is projecting for next year's revenues. We're looking at, over $6 billion. That's what I've heard. That's a pretty significant amount, and that's for a startup company. And they're still gaining customers. They have several million at this point. So it's going to be interesting to watch them and to watch who decides with their competitors who's going to stay in the market, given that they are first to market and moving quickly.
So that's the biggest current section of the market is delivering video and other internet broadband services, and there's really a lot of growth. What about some of the other sectors? What about remote sensing? What about launch? What about ground? What are we seeing in terms of growth in those areas?
Well, I would start with remote sensing's had a tough time. We've seen some of these companies, such as Black Sky and Planet, emerge, and they're 10 to 12 years old, and they're still not profitable. However, they've both undergone several efficiency measures, and we're starting to see them close the gap. So I wouldn't be surprised if we start to see some profits at some point. But they came out of this, in fact, they were SPACs at one time, both Black Sky and Planet. So we're starting to see a greater return on investment, according to some of the reports I've read. And I think we're going to see some of these companies start to turn around. but remote sensing has been a tough play. They are gathering more customers, many big government customers. So again, it just takes time.
And I'll just say, in economic terms, you can be a successful company and not always have large profits, correct? Because profits are what's left over after you've collected all your revenues and paid for costs.
Yes, and also invested back in your infrastructure to command even more market. So it's still a young enough market for that. But I mentioned a key word called time. And I think we all forget about that when you do these economic valuations. And time is so important as you think about the discount rate or the inflation rate, the time value of money. So I think we have all underestimated the amount of time it would take for some of these companies to move towards profitability. And I think we've also underestimated the time it will take for NASA to get back to the moon and then Mars. And this is one of these issues related to behavioral economics, which is it's called the planning fallacy, which is, we all underestimate the time it's going to take to do something. And there's so much hope in the industry. And it gets back to what you said with this, we need to have rational exuberance, and that includes rational planning around these time frames.
Yeah, and I think it's also fair to point out there's plenty of other non-space companies that are very large, collect large revenues, and are also not profitable. I'm thinking of things like Uber and a few others, right, where they're spending a lot of money to build position, to build infrastructure, to build market share, not necessarily turning profit. So profitability is an important measure, but that's not always a good measure at different stages of how the industry is developing.
Yes, I agree with that. And let's not forget Amazon. They were unprofitable for years.
Yes. So other sectors, we hear a lot about the space launch sector and how important that is. My impression from looking through the data is, while there's certainly been huge improvements, lower costs, radical new technologies, capabilities, that's still a relatively small market. Is that what you're seeing as well?
Yes, in the launch market, it is. I'm also a little bit worried, as many economists are, when they look at these markets, that it might be too consolidated. Some view it as a monopoly or a duopoly, primarily with SpaceX and then Rocket Labs. It's a market that I don't think they intended to be a monopoly. Some of these, launch is risky, and some of these things are delayed. So that does not necessarily help the situation right now.
And there's also a lot of state actors in the launch market, right? Because it's an area where there's a strong national security sovereignty interest, and there's several pseudo companies or state-owned enterprises that are involved from many countries that are also involved in the market as well.
Exactly. Yes.
Yeah, that's hard to do. And then what about ground infrastructure? Something that I know the space industry often doesn't talk about because it's not as cool as the satellites or things orbiting out there.
It isn't as cool.
Right? Yeah. But I would think that with the growth of the space industry and more things in space, you mentioned all the growth in the number of satellites, we would also be seeing growth in the ground infrastructure market. Is that happening?
It is. What's exciting about that is ground station as a service. That is really lowering the overall CapEx for operating, sharing that infrastructure across many customers, and allowing for greater versatility. So I think that market's very, very exciting.
You mentioned a term that I want to go back and just unpack a little bit. That's SPAC.
Oh, yes.
And this is something that we saw happen several years ago in the space world, but not just in the space world. SPAC is a special purpose acquisition company.
Right.
And the way that I understand it, it is a public company that is created for the sole purpose of acquiring and merging with another company, and thus both then become public.
Yeah, that's right. In fact, in the 80s, they referred to those companies as reverse mergers.
Interesting.
And I think it's introduced a lot of froth into the market, and then disappointment as well. Some of these SPACs are no longer in business. Others have seen significant declines in their valuation. Planet is at a fraction of what it once was, and Black Sky as well as another one. But but it's a healthier time right now. The Securities and Exchange Commission, the SEC, regulates how SPACs can operate, and it's actually a little more lenient. They don't have to go through the types of market research and forecasting that a typical company that is about to go public through an initial public offering or IPO would have to do. More recently, a few months ago, the SEC proposed new regulations to increase the amount of accountability. I think they're seeing that SPACs need greater transparency and better accounting of some of their forecasts.
And that's really one of the motivations to do a SPAC, right? Is that you have a company that is funded by venture capital or funded by private investors that is then looking to go public to be able to tap a new source of revenue. And the traditional way of an IPO, it can be challenging, right? You have to do a lot of analysis, a lot of growth. SPAC is another way to get there. That in some ways is a little bit easier, and that was the big draw to a lot of this.
It's correct. To defend the space industry for a second, they can go in and they can create froth around it, but at the same time, a SPAC allows you to not do a direct correlation to existing markets to defend your forecast, and these are new business models. So in that sense, it seemed appropriate.
Yeah. So it's hard to defend an existing market when you're creating the market as you're going.
Exactly.
Along. Correct. Yeah.
Yes.
Got it. And as you said, there are various tools out there to track where those SPACs are today. Some of them, as you mentioned, are no longer in business. Some are still around but struggling. Others are on the list of companies talked about that have good businesses. They have lots of customers. They're generating revenue, but they're not yet quite generating the profitability that maybe some of the public investors and public markets were looking for.
That's right. We're starting to see them close the gap towards profitability. That gets back to the time factor. I really think we underestimated the time.
And then, of course, there's another challenge here is that there are some space companies, including some very big and prominent ones, that are not public. And with a privately held company, we have the challenge of how do we know what the revenues are, what the costs are, all that, because they're not required to report that same amount of data as a publicly held company is, right?
That's exactly right. And so this gets to the government being an anchor tenant. They depend upon these customers, these suppliers. And there's a lack of transparency. And I realize they do their due diligence, but privately held companies have less transparency in general.
Yeah. So that is another part of this whole analysis that is a little bit hard to dig into. Karen, you've mentioned a few times this question of time and why that is an important factor in the analysis and how we sometimes don't quite totally get that right. If you could go back and sort of unpack why time is so important and maybe some of the other elements that we don't think about enough.
Okay, sure. Well, time is very important for market projections and being reasonable about how long it will take to develop a market. So time is one dimension that has often been trivialized, but really it goes back to market demand and how much time it will take to build a market for any type of application, whether it's broadband customers or remote sensing market. And it is taking time. And that is why some of the forecasted models from some of these remote sensing companies has been way off. But the froth seems to be off the market. And several of the remote sensing companies have been meeting analyst expectations for their quarterly revenues. So it seems like at this point, if you look at the overall remote sensing market, you're starting to see some very steady pace towards building new remote sensing customers. So that's looking better.
And one of the challenges there is just saying I have a satellite take pictures is not enough, right? You have to actually have products that the customers are buying into, and something that every company struggles with.
Yeah.
How do you productize things? How do you create things customers want? Pricing, all of that sort of thing, right?
Exactly. And you know what I found incredulous here is that if you listen to these public releases regarding companies, they talk about the value of the space economy. Really, they should be talking about the value of their customer demand, which is different from the value of the space economy. So even though we're talking about the overall space economy value, what is the value of specific markets that these space companies are chasing. That's what's important for their revenues and their profitability in the future.
And then another aspect of this time are some of the assumptions you make about things like discount rate and inflation. Can you explain a little bit more about how that is done and what some of the pros and cons are and pitfalls are of that?
Sure. Well, there is something called the time value of money, and the discount rate for cash is tied to the inflation rate. So with higher inflation that we've seen over the past several years, the time value of money has gone up. And no one knows that better than Silicon Valley Bank, that bet against interest rates and lost. And they lost in terms of $200 billion in assets. And Silicon Valley Bank, as you know, is the lifeblood. They call themselves the lifeblood to the tech corridor in Silicon Valley. And there were several space companies that were part of that Silicon Valley Bank system. So they had to scramble, and the Federal Deposit Insurance Corporation had to come in and back them and make everyone whole again. And so that was a very tense situation, not only for the space industry, but the overall tech industry as well. And it gets to getting back to your focus, which is the government customer. If the government customer is relying on companies that are banking with a bank that fails because they bet in the wrong direction for interest rates, what does that mean? And how sure can we be that we have these space services in the future for various government applications?
Yeah, and that's another aspect of this we sort of brought up a couple of times, but I think it's really important to consider is with the growing expansion and increased capabilities of the commercial space sector, there are now multiple government agencies in the U.S. and frankly governments around the world that are thinking about or looking to the commercial sector to provide capabilities. The U.S. Department of Defense, they're looking to provide commercial satellite communications, commercial space launch, satellite servicing, or what they call ISAM, in-space servicing, so manufacturing, all of which, in times the Department of Defense has done itself, but the question is, should the military continue to do that, or should they be buying as a service from the outside? In the intelligence community, we have the NRO and others that are now relying quite heavily on commercial remote sensing, in part because it just gives them a lot of different capabilities, things that they can also share with other allies and partners more easily than they can with some of their own capabilities. We have on the NASA side, we have, NASA is currently using commercial capabilities to supply cargo to the International Space Station, send crew back and forth, and we've seen some recent news events about those. They're now looking also to have commercial be the future for low Earth orbit. In other words, the space station is going to come to an end, and the goal is that NASA is going to be a customer of future commercial private space stations in low Earth orbit. And then, of course, we have the Artemis program to return to the moon, where commercial industry is creating the rocket, the capsule, at least one of the capsules, space suits, the landing vehicle, and is heavily involved in the gateway that is going to be circling the moon. So lots of interesting government leveraging commercial, which can be great when it's done well, but it raises a whole lot of other questions of what happens if how reliant can the government be on that in some of these cases.
That's right. So, you've described this whole ecosystem of government applications, civil, defense, intelligence, that rely on commercial space. And then commercial space is relying on these lending institutions. I'd like to see some stress testing of the entire value chain to see how that does in various economic scenarios. That would be interesting. And certainly the banking industry does that to look at how they can withstand certain economic shocks.
And this has been, and this is not a new challenge. I know back on the DoD side, when it comes to space launch, there has been this policy for what they frame as assured access to space. And what they mean by that is they want more than one option, right? They don't want to have just one rocket or one company that can be that's providing this, because what happens if something happens to that company, or what happens if there's a technical problem with that rocket or that spacecraft, and then suddenly the national security community can't do what it needs to do. And this has been, around since the 1980s. There's been lots of different issues with it in the past. Things like those that remember the EELV program, which was buying rockets from a couple of different companies. And then now it's something NASA is also dealing with when it comes to, again, access to the space station and their future markets. How can they have more than one provider so that, they can not have to deal with a monopoly situation and also have redundancy in the capabilities. We've also seen lots of other questions come up when it comes to sort of how the government should leverage this, or what are the other policy issues.
Yes.
One that we've seen talked about quite a lot is this question of liability and indemnification, particularly when it comes to national security. So, for example, right now there's a conflict going on in Ukraine, and commercial is providing a lot of capabilities that are being used in that conflict, and that again raises the question of what should happen were those to be attacked, or should they be degraded? Is the government on the hook for that? Should the government backstop some of that? That is a huge issue. And then in a discussion about commercial destinations, commercial space stations, one of the things that came up in that discussion is there's not a ton of extra capacity in the space insurance market to insure a billion-dollar space station or a multi-billion-dollar space station that is being run by commercial actors, right? And so, again, these are all considerations the government has to take into account in addition to, how much can we buy? Right?
Correct. And right now, the government doesn't issue war insurance, as I understand it. What they do is they insure future revenue streams that a commercial company would expect. But then you go to a commercial LEO destination where their future revenues are kind of questionable. I think that would be a very hard thing to insure. I think it's very challenging.
And of course, there's also other considerations where the government, does an annual appropriations process, right? And there are some legal restrictions on the government sort of promising future things that Congress has not yet appropriated. And as I understand, there's also some restrictions on the government on anchor tenancy and the government playing too strong of a role that have to take into consideration.
Exactly. Yeah, the whole idea is for government to start to step back and let the commercial market fill in, and they become just one more customer and not the customer.
No. And then going back to things that I tend to focus on more, some of the policy considerations. We haven't really touched on some of the government restrictions on the commercial space industry. For example, export controls.
Right.
Many of these commercial technologies, nearly everything related to launch, human spaceflight, re-entry, are considered weapons and have significant restrictions on their export to non-U.S. customers, which is okay if your entire market is in the U.S., but as we know, this is a global industry and a global market. So that is a huge consideration. We've also seen in the past very strict restrictions on commercial remote sensing, where the national security community was concerned about some of those products being available on the market that could impact U.S. national security. And so they said they put restrictions in place, such as, resolution limits or nighttime imaging or different types of, or you can't do certain types of things, which then have hindered growth of industry in the past. And we have seen some pushes within government the last two administrations to relax some of these things, but it's still very difficult.
It is. And as we think about the overall space economy, what you're highlighting are the different risks. And that needs to be factored into the overall value as well. And not to mention the environmental risks that we're starting to see in terms of terrestrial, in terms of spaceports themselves, potentially air, and of course congested orbits and possible debris from that re-entering the atmosphere.
Yeah. Well, and going back to the time question, all of that makes this question of what it will look like in the future and how much it will be worth even more challenging to sort out. So, as we were talking about this earlier, and you mentioned that one of your goals was that eventually the value of the space economy could actually reach zero. What do you mean by that? And why would that be a good thing?
Okay. Well, that's kind of a facetious statement, but the idea is space becomes so useful and integrated into many different industries, adjacent industries, that it disappears into the ledgers of those industries, supporting in a mutually supportive way other industries. It's a little bit facetious. You have to draw the line between what is, for instance, agriculture versus space. What's the difference between mining and space, or pharmaceuticals? Space can support all of those industries potentially. So it's how do you do the accounting? But as space becomes more relevant in the future, that was kind of the thought-provoking statement at the end that it could disappear into the ledgers of other industries.
So you mentioned pharmaceuticals. So there are currently experiments and efforts underway to see, are there things we can create or grow or make in space that are much better than we could do on the Earth? And so what you're getting at is, if that is ultimately successful, and those space-derived pharmaceuticals or industrial products become hugely successful, are they really space, or are they just part of the pharmaceutical industry or part of the industrial chemical industry or whatever?
Correct. That is correct. I will say that some of the industries I just mentioned, time would be a huge factor in space becoming, really integral to some of these industries. It's going to take a lot of time.
Yes. So in some ways, ultimate success of commercial space and commercial growth in space is that it's maybe no longer special, or maybe no longer normal, and maybe no longer we have to break it out like everything else or separate from everything else.
I think so. I think that's a really good way to approach it.
As we're getting to the end of our conversation, one thing we have not discussed yet is another way to measure the space economy, the growth in it, and that are indexes or indices, depending on which version of English you speak. Can you talk about what those are and what value they provide?
Sure. So there's a number of private capital space investment indexes that have emerged over the last several years, and they're incredibly useful as we look at the relative movement of the space market, not the absolute valuation value, but the relative movement. Some that I can think of that have been helpful for my research in the past have been the Seraphin Space Index, Space IQ, Space Investment Quarterly, and the IPOX SPAC Index. There's also some other publicly traded stock performance indexes I like to look at to weigh against how the space sector is performing. So that's all very helpful. Oh, I also wanted to mention there's the S Network Space Index, the S&P Kensho Space Index, and SpaceWorks New Space Index, which is quite good. All these provide some insight into, and they each pick a basket of space stocks, publicly traded, of course, and they look at those and track their movement. Now, on top of that, there's another index that I would like to see the space sector start to use, and this has less to do with private capital and more to do with something you mentioned earlier, Brian, which is market consolidation. And there is a traditional economist tool used to measure market concentration called I call it the HH index. It's the Herfindahl-Hirschman index. And it's a traditional measure of market concentration to determine market competitiveness. Why bring this up now? Well, we're starting to see inorganic growth due to companies merging. And while there may not be a concern now, at some point, an index value might tell us when we're getting into the yellow or red zone for, are we still a competitive market for these different space applications?
And that has policy implications for governments that are looking to create competition, create growth, diversification, not just one or two big companies.
That's absolutely right.
Okay. Well, as we wrap the conversation here, any other closing thoughts you might have that you want to share as you look back to, how we should think about this issue of measuring the value of commercial space?
Well, I think one of the things we can do is to be part of this larger industry group and think in terms of less space exceptionalism. Space is becoming a commodity, it's becoming a service, it's becoming an industry that we're all accustomed to. So I think it can stand by the same measures that the rest of the industries also follow and perform towards.
And to that end, we mentioned earlier the new analysis that the Department of Commerce is doing. That is enabled by the decision of the Trump administration to track space with the same metrics and numbers that they have been tracking all the other industries. And so that data is still pretty new, but as it comes in, that is going to help us build up a better way to really do an apples to apples comparison between the space industry in the U.S. and all the other parts of the U.S. economy.
Correct.
Well, thank you very much for joining me today, Karen. I've really enjoyed this discussion. Back to you, Colleen.
Well, thank you both for the discussion. Indeed, methods do matter. And to learn more about this and what it means to U.S. policymakers over the next 4 years, go to csps.aerospace.org. The paper Rational Exuberance, Understanding Value and Performance in the Space Economy is part of Space Agenda 2025, a compendium of papers that bring forward some of the major policy challenges today and frame out how to think about them. Thank you for joining our deep dive series. Follow us on LinkedIn to get notified of more shows. All of our shows are on YouTube or your favorite podcast platform. James Liggins is our technical director. Bye for now.